panels. Lovely, broad topic, where to invest. That means I get to ask questions across a wide range of subjects, which is the best thing to do. Where to invest. I think I want to start today with where to invest from a commodities angle. We had a lot, we've had some fairly wide range of conversation yesterday, and I'm sure that will continue today. But I want to ask about metals. So, I spoke a lot about gold, but I love this market for its range of commodity options. I think there's good fundamental reasons to believe in gold, but what I love is that there's a multi-metal strength as we look ahead here. So, let's just start. I'm going to start with Greg. He's right there beside me. In the next year, what commodity do you see? What commodity gets you most excited? Or maybe you don't like any of them. In the next 12 months.
Next 12 months, yeah. I'm like you. I have the voice thing going on too this morning. Must have been something at the speaker dinner last night.
Right, yeah. Blame it on that.
Yeah. Anyway, aside from precious metals, the base metals, I'm bullish on zinc and uranium, although we may have to wait another year for uranium, but I think we're getting closer finally to uranium. Something's got to break there. Zinc, with the 4 or 5 large zinc mines shutting down in the past several years, there's definitely going to be a squeeze with zinc. That seems to be a really good thing. With the euphoria in the markets, copper's getting some attention, but is that sustainable? If it's not sustainable, then you could see a pullback in these commodities. But overall, I'm bullish on zinc the most, I think, and then uranium second.
Interesting.
Zinc at now $1.40.50 is probably the highest you can probably hope for on a long-term basis. If it goes higher, you end up having a substitution and thrifting going on with zinc. There are no fancy new applications such as with the cobalt cathode and the lithium ion battery driving future demand for zinc, but we have this problem of depleting Western mines, not a huge amount of new mines in the pipeline, primarily because from 1980 on, China came out of nowhere and ramped up production to end up having 40-45% of global supply. Now the argument for zinc has been that we're going to end up with a supply-demand imbalance because these other mines are not coming on stream. And it's because of this fear that if the price ever goes up, the Chinese just ramp up new supply. So the reality that's happening in China is there are all these small-scale operations. There are no giant red dog type operations in China, and they are nasty, polluting operations. Many of them feed to small refineries and smelters. And China's pollution problem is a Communist Party threatening problem. And that's one reason Xi Jinping has launched a crackdown on corruption, because the corruption includes a non-enforcement of environmental rules at the local level. So they're trying to get this under control, because no matter how much they try to squelch the internet and social media, that is still going to be the medium by which rich and poor in China start to complain about the environment. So I think the idea that has not yet been fully embraced by the market is that China's production is not only going to stay flat, such as it has in the last few years, it's actually going to start to decline. So we're going to see a scramble to put zinc projects into production, so the optionality play for zinc juniors, that is the one optionality play that I think is meaningful to bet on. All the other metals, I don't think they have substantial upside potential, except for cobalt, which is undergoing a manipulation similar to the uranium bubble and will end up similarly, but there will end up a lot of M&A activity in the cobalt space, and it'll all end up being tears by the acquirers down the road. So I agree with Greg. If there's one metal that you should be looking for, it is zinc, and it's may spike to $2. That's not sustainable. Glencore can put its mine that it shut down back in production in a couple of years and take care of that. But this $1.30 to $1.50 range is what people are going to start thinking is the long-term future for zinc, and that means a lot of projects deserve to be pushed into the feasibility demonstration pipeline.
There we go.
Gwen, did you say it had to be the metals, or?
Right now, let's focus on
Metals?
metals.
Okay, well, I think,
I've got more questions in the pipeline, don't worry. But right now, metal for the next 12
Okay.
months.
All right, well, I think both John and Greg made a really good case for zinc. I don't see how you can disagree with that. With regard to gold, though, I think in my talk yesterday, I mentioned about the possibilities of a more significant decline in the dollar next year, which I think could be very bullish for gold. So I think gold could be a surprise this year. Could break through some, I think if we get through 1350 or so, we could really start to see a very dramatic rise in the price of gold. It's going to surprise a lot of people, I think. But zinc, and then I would say gold.
Jay, which of the other currencies is going to be the one that ramps up against the US dollar?
Well, I don't think there's any one currency, but I think you're seeing definitely seeing the petro-yuan start to play out. The petrodollar is under pressure. As I said yesterday, no, I think there's a good chance that we start to see some cracks in the existing establishment in terms of the dollar's hegemony that's been lasting for so long. But geopolitical things and factors in play, as well as just an attempt by, the Chinese and the Russians are not using dollars anymore. They are using their own currencies, and the Chinese now have set up both a petroleum market and a gold market. The Russians and the Iranians are selling their petroleum to China for Chinese currency that can then be exchanged into gold. And Saudi Arabia happens to be China happens to be Saudi Arabia's largest customer now. And China wants Saudi Arabia not to use dollars anymore. So the whole post-1971 era has been built on the dollar hegemony that was forced, as I pointed out, through military force and through diplomacy. And as things are changing around the world, geopolitically, I think the dollar is going to come under pressure. It was in 1988 that The Economist was predicting this would be the year for a new global currency. So I don't know. I mean, I think maybe the beginnings of that we could see, and I think it could have a very profound effect on, it's not that gold gains value. It's never the case. Gold doesn't gain value. It holds its constant value. But the currencies are all debasing. And we have an enormous amount of money that's been pumped into the system that's high-powered money that I think is now going to start and is actually starting to make its way out into the real world and the real economy. We're starting to see some growth in the U.S. economy, a little bit of growth, and I think that's because finally the bankers have to let go of the money, this high-powered money, because as interest rates start to rise, they're going to lose money if they hang on to their bonds. So the money is going to be coughed out of the banking system into the real economy finally. I believe that's starting this year. That is going to put some pressure on interest rates. We're going to see as interest rates rise, you're going to see more money coming out. And what's the Fed going to do? Can they go in there and slam the brakes like Volcker did in 1980? I doubt it. I think they're going to have to print more and more money to keep solvency, to keep liquidity in the system. So I think these are signs that are very, very bullish for gold. But, who knows the timing? It's supposed to be this year.
Right.
All
In
right,
the next 12 months. No, I mean, okay, that's a good starting point. So I like, so we're looking at gold. We've been looking at gold. Yesterday and today, gold is always, I would say, the first commodity of interest. But zinc 5 years ago, 4 years ago, 3 years ago, I called it for quite a while the metal that cried wolf, because everybody kept saying that zinc was going to go, and it didn't go, and it didn't go. And then now finally, clearly, it's happened. I certainly am a strong believer in the fundamentals for zinc. So I'm in agreement with what was just described. Okay, so we have some commodities that we're interested in. The next thing that I want to get into is the stages of the game. How do we, I mean, there's a big risk component to investing in this sector. Clearly the risk is highest if you're going to go with early stage exploration, but there's risks all along the profile, and there's different levels of opportunity all along the profile as you go from exploration to advanced exploration, and then into the, figuring out if the mine will work, and then into the building a mine, and then into actually mining, and then there's alternatives or options on the production end when you look at royalty and streaming companies. So let's talk about which stages of that game you like the most and you think at this stage in the cycle offer the greatest opportunity. So
Yeah, for me, I like all the sectors, each one, for different reasons. I usually like exploration, early stage grassroots exploration, just because of the leverage you can get when a discovery is made. That's where we usually make our biggest gains. But what we're seeing right now is, so many good discoveries or good companies, production companies, are trading again at a discount to what they really should be. And why go with something that is unproven when you already have a proven asset that you can invest in at such a low price? So right now I see that as where we should be focusing our attention. The value is there. I'll have more talk about that in my talk at 1:30 today. I don't want to give away everything, but I just think that there's plenty, opportunity abounds right now, and for those that are looking for value, you can find it.
yeah, that's interesting. I think as we've gone through the fall, and as I've been having conversations with all kinds of folks, investors and newsletter writers and the like, there's been the idea that there's assets out there with proven value that are not, proven assets that are undervalued, and the risk moderation that's there versus the exploration. That's a topic that's come up a lot, which has prompted this exact question on my part. So, John, what do you think? I know you're an explorer at heart.
Yeah, and I don't think we're in super cycle conditions where we're going to see 3, 4, 5-fold real increases in metal prices. I don't see a real pricing demand, a real price driver for gold. Sure, if inflation and stuff materializes, well, that means the cost of everything goes up also. So your project that's marginal today is going to be marginable later, though there will be a sucker window where everybody piles in and say, oh, it's finally happened, and gold's going to the moon, so there'll be this big ramp up, and this will be a chance to blow off all your optionality plays. But right now, the optionality trade, especially with gold, has become quite tiresome. They're not really undervalued. Everything was bought for overvalued prices by the majors in the prior 5-6 years. What's left in juniors, there's a few exceptions like Midas Gold, but even that really needs a $1,600 gold price unless they can pull up the grade through more infill drilling on the Stibnite project. So I've moved away from, I have my few token optionality plays as sort of a long-term type of play, but I'm much more interested where there is discovery exploration potential. And in zinc, you can see these big giant zinc deposits such as those up there in the Yukon, Northwest Territory, the Selwyn Basin, but they require enormous infrastructure investments to make those happen. So I like the smaller zinc projects where there's potential to do expansion drilling, make it bigger and better, and there you get both worlds. You get the optionality of a metal that people think is going to be strong for a while, and you also get the possibility that things the company can control, namely the exploration program, that can make it better even while the metal price languishes. And then feasibility demonstration work is very expensive. It's extremely boring. The news is uninteresting. The institutions aren't yet fully back into the metals sector. Retail got blown away, never really participated in the super cycle because they didn't understand the number crunching aspect. I think we're on a cusp of back to something like the 90s where retail was very much heavily into the market because things like Diamet and Diamond Fields and Arequipa, they all exhibited phenomenal price gains. And in that, from target generation to discovery delineation, that's the sweet spot, what we all call the S-curve, where you end up seeing enormous valuation show up during that window of uncertainty where nobody can say, no, it's only this big, and I can crunch the numbers and tell you your after-tax NPV is such and such, and based on that stage, your stock should be priced at that. We don't know whether it's going to be this big or that big until all that work is done. That's why you get that phenomenal S-curve, and we're starting to see it. We see things like Garibaldi and New Nadina. I mean, there's no information available to justify the valuations that we're seeing, but the market's hungry for these types of discovery stories. Yes, a lot of them will end in tears, but this is just the beginning of the cycle. Capital is just starting to rediscover this space. So it's that target testing and then jumping onto a discovery delineation play where it looks like it has scale. That, for me, is my primary focus these days.
All right.
Yeah, I think a mixture of the different stages along from discovery to production. Optionality plays, well, yeah, I agree with John that they're not, they're not all that exciting, most of them. But one that seems to be terribly undervalued to me is Seabridge, although it has huge cap cost if it, for in a production scenario. But if you just look at at what they have relative to their just to make a case, a comparison, a stock that I like a lot, Novo Resources, has a market cap that's about equal to Seabridge. And Seabridge, if you know, it's millions and millions of ounces of gold, and Novo hadn't yet put in a single drill hole. So at the same time, Novo, as John can talk about it very well, better than I actually, in terms of what's going on there, but it's an extremely exciting project. And I would just say that what John does is finds ideas that are new and novel that make sense, and sometimes they can take forever before, and maybe they'll never come into fruition. But clearly, new views or ways of looking at deposits or ideas that come along now and then. There's some people, some geologists, that come out with some very interesting and good ideas that. So I'm putting a plug in for John's newsletter because I think he does a wonderful job in that. And I say that only because he finally got interested in Novo and is doing all the heavy lifting for me now. So Thanks, John.
Now, if you'd gotten me to do that 1 week earlier, it wouldn't have been $2.12 by the time I got around to recommending it.
Yes.
So I also like. I know that project generators are sort of boring a lot of times, but I still think that if you can find a project generator that can focus on one or two projects, mostly one project, and start to really develop it themselves. I mean, I'm thinking Almadex Mining is one that I like a lot, that is sort of the best of both worlds. It just is really good at exploring, developing value in the ground, and it also has a number of other projects. It just had a wonderful track record. And I think a very painful one for me is Riverside that, I've had it for 8 years and it's gone nowhere or whatever since it went public. But in talking to John Mark Stouty yesterday, I have the sense that this may be the year when they finally come through with something significant in Mexico. And again, because there's so few shares, 40 million shares, that any kind of significant discovery would really jack the stock up, I think. So, but I like to have a mix of things in my portfolio, from exploration, where you have the really great leverage, to things that are a little more sure, and with some production, even like Kirkland Lake, for example, is in my portfolio. What's not to like about Kirkland Lake, I think. So. For
sure. So, I mean, a lot of good comments there. The summary, Jay sort of summarized it there, having exposure across the spectrum. Certainly something I advocate, because exploration is super risky, and most of the time it doesn't work, and then when it does, it's amazing. There's certainly some of these hot stocks in the sector right now have been raised in this discussion, right? We've mentioned Garibaldi and New Nadina and Novo. There's been these crazy stock moves based on, initial discoveries, some of them legit. So I think there was a comment here that this really shows this appetite for discoveries, and I think that's really interesting that this market, still pretty new, still not a huge number of investors participating in this market, but those who are participating are clearly really keen for discoveries. What I'm seeing, so that's great. What I'm seeing lacking, though, is leverage, right? When you get the gold price move, you're not getting as much price move on the producers or on the developers as you would want to have for evidence that we're in a really strong bull market. So what's it going to take to get, or does the market need new investors? Are there enough investors in this market? Do we need, how do we attract the institutions? Does it depend on the US markets? I mean, this is a bit of a big picture question, but I think for this bull market to really get going, we need to increase the number of investors that are engaged. So, Greg, what's your take on that situation?
Well, we need a catalyst. This is part of my talk this afternoon. Without a catalyst, I don't think we're going anywhere in the precious metals world in particular. What kind of catalyst? Jay mentioned something earlier, this particular situation with the Chinese gold-backed yuan petrodollar. Their currency, this being a challenger to the U.S. dollar, reserve currency status that's been in place for 50 years. That's a major change. That's something that could really cause safe haven buying to move into the metals, the precious metals. I'll share one of this for those that won't attend my talk. I was going to share this later, but I'll share it now.
Yes, I got him to do it.
One of the most important conference I attend every year is the Beaver Creek Precious Metals Summit. It's not a retail show, it's only for fund managers. It's held at a beautiful ski resort area next to Vail. For those of you who know Colorado, Beaver Creek. Just gorgeous setting, and usually you get 300 to 500 fund managers from New York, and most of these people, like one gentleman I met that I've known for a long time, he manages over $30 billion, right? There was a fund there this year that manages 1.3 trillion, most of it Saudi oil money, right? So these guys come to this show to meet the gold companies, right? And I went to the show, drove up the hill, because I live in Denver, and I just had in my heart a hope that, these guys are coming into the market because they are the biggest drivers of our market, period. When they come, everything goes. All the boats float, okay? And we've seen how much money they can put into our market. And, I learned this lesson the last time we had a collapse and the funds just left in droves. And the retail investors do not make up the biggest portion of the people who support our market. The most of the money is from these fund managers. And so anyway, this one particular guy that manages 30 billion said to me, I said to him, well, what do you think? Are you ready to write the checks? Are you ready to go big? He says, no. I said, well, why not? He said, well, I'll tell you. He said, I just watched the Federal Reserve, and I watch as soon as they do another dump of money into the system, into the money supply, Facebook goes up. More money, Facebook goes up. More money, Facebook goes up. It's the dumbest, stupidest trade I've ever done in my life, and I'm making a fortune off of it. So why would I want to change that and buy gold right now? And I thought, oh, that's not what I wanted to hear. But I think it's accurate, unfortunately, until we get a catalyst. And he's a gold guy. He likes gold, but he's not ready. He's not ready to write the checks yet. And I saw some guys, they were kicking the tires and they were writing some small checks for some financings, but it's not that big rush that we need. And we saw that, in the 18 years that I've been doing this, we've seen those guys come into our market at times with a vengeance. And that's what we need. We need a safe haven catalyst. Otherwise, I just see the market chopping. The Fed and their bullion banksters keep a lid on gold and silver because they got to protect the sacred U.S. dollar, because that's the currency that their whole system hinges off of, right? So if the dollar goes down, their system implodes, right? So they have to do everything in their power to protect that, and they can't let gold and silver prices go higher. So, unless we get that catalyst to blow through that and go to where I believe precious metals should really be, then we're just chopping sideways. We're not going to go anywhere.
So then, in that conversation, we previously were talking about strength in zinc and very much believing that the zinc market is a fundamentally strong market. Copper is exhibiting similar signs. The electric vehicle trade is really strong. Lithium stocks have gone again. Cobalt's doing well. There's graphite interest. Can the base metal markets create enough of a mining market, enough momentum on their own to create an interesting metals market if we don't get this big push from a safe haven thing into gold? John?
No, I think relying on higher metal prices is a waste of time. And addressing your earlier question of like what is needed to bring the audience back in, Greg was suggesting a catalyst. Gold going up, yes, that will bring in institutional capital on that, but not necessarily the retail capital. The retail investor wants outsized gains. They're not interested in 20, 30, 50, 60% or something. They want 5-baggers, 10-baggers.
Yes, please.
And the changes in the industry, the brokerage firms don't cover the juniors. They may cover the bigger companies that are optionality plays, but their analysts can't cover this junior space. Now, the newsletter community is tiny, and 3/4 of it is simply focused on ideology, pumping ideology, peddling gold to people who don't like Obama or socialist policies or stuff like that. And these people aren't interested in the junior exploration game. In fact, they're probably not even interested in buying the optionality plays. They just want to buy gold. Now, the retail market, because nobody tells them, like these 24 companies that here, if they are successful, what is the size of the prize? How much money will you make? The companies can't tell you because they need to do a 43101 PEA that costs millions of dollars to be able to tell you that. The analysts don't do it because they're too afraid, and very few newsletter writers do it. I do it myself, but it's the inability to understand what the bet is. So now we're seeing money migrating into Bitcoin, where you don't have to understand anything. You just do blind gambling and hope that the tulip mania in it takes it higher and higher and higher until it ends, type of thing. But I've done something that's going to change all that, and the Novo thing is the catalyst that Greg's looking for. If this ends up confirmed as an extraordinary gold discovery with economic grades spread over a huge area, that will pull in an enormous amount of money. But that still leaves the question, how do you value the company? So what I've created is I've cloned myself so that all of you can become just like myself, and this is the share collective that's going to go public in about a month. And literally you have to pay. It's not one of those free things like Stockhouse. You pay some whatever, $40 a month or whatever they end up deciding it to be. And you go in there and you can find all the companies. And it's like a online spreadsheet. You can say, well, what does deposit going to look like? 10 million tons of 5 grams. Okay, what would that be worth? Okay, what would it cost to develop it? So you can come up with all these numbers. You can see what others have done, and then you push a button, you get your NPV after tax and all this. And when you're happy with it, you have a choice of actually sharing it into the public space for others to see. So the crowd, this system is going to enlist the crowd to visualize the outcomes, quantify them, and share them very early in the game. So that with these, like say, Alto Ventures, like what do they need to find there in that Oxford Lake, Knee Lake, Greenstone Belt, and in terms of a banded iron formation, or Mineral Mountain with its Rochefort district? This will allow you to have a competing number of people sharing different outcomes, and you'll be able to see what the consensus is, and the audience can see this is what the crowd is. Here's the negative outliers, here's the positive outliers, and you can place bets on the outcomes. And this will really empower the companies, because people will give them money. Okay, we want you to drill those 24 holes into this system and prove that there's another home stake in there. This way we bypass the brokerage industry entirely. It attracts an open-ended gambling audience, international. you start off ignorant about how the space works. You learn very quickly what does a mine look like, what does the income statement look like, what do you need to worry about metallurgy and all that. This system, the share collective, will ramp up the return of the retail audience into this space, and the catalyst will be this Pilbara gold discovery that Novo has made.
And we all get to be John.
Yes.
Most important.
And I get to retire and don't have to do this anymore.
To be honest, I actually don't remember what I asked anymore because that was a fairly long answer.
Yeah.
But Jay, if you remember what I asked, please go ahead and answer it.
I kind of do, I think,
Okay.
but actually, I was just going to say, John, that was a wonderful commercial, and
Exactly, yes. I had the same thought.
I would pay $40 a month to be as smart as my friend John here. Definitely would.
He might be smarter, has
No,
he
but he's,
put more
I
effort
might be
into it.
smarter if I buy your service. No, John has explained it to me before, and I think it's a great idea. I'm certainly interested in it. You can sign me up if it's $40, John.
If.
Yeah.
Just don't sell any more Novo. Wait until it's $50.
Okay.
Then you can afford it.
I think the question was whether a base metal market can carry a mining market, a mining investment market, without a gold impetus. If you have comment on that, or I can move on to other questions.
No, I would say I think that you know, if my view that we're getting more money into the economy now because interest rates are rising and banks have to push money into the system, I think it could be very bullish for the base metals. So I'm kind of, I mean, I'm usually just a gold bug, but I'm willing to buy zinc companies and things like that now because I think we're in an inflationary environment. And John's point is well taken that that's not necessarily good for the metals. You know, it depends on every project and the cost of getting it out. If your costs are going up faster, it's obviously not a good business. You know, I think I'm bullish on the metals for those macro reasons.
All right, so that's been a fairly macro conversation. Let's distill down and get quite specific. It's a difficult question to answer, and I'm sort of annoyed at myself for asking it because I kind of hate when I'm asked it, but I'm going to do it anyways, which is, if someone approaches you and introduces a stock that you've never heard of before, a story, what is the first thing that you look at? For me, I actually click on the share structure. The first thing I want to know is what the share structure is, before I even know what the asset is, or the commodity, or the people. Clearly those things also matter, but that's the first thing I look at. So, I mean, you could go more than one step, but what's step one in your process?
Yeah, I would say I'm definitely a share structure guy. I want to see if it's a tight share structure, if it's bloated to hell, you know. But the people, next thing I go down is the corporate and look at all the bios of each of the individuals, because to me that it just, the success that I've had comes from the people. It comes from the same people, right? The old statistic of, you know, 94% of working geologists will work their entire careers and never make a discovery, never get credit for an economic discovery that goes to become a producing mine. Well, that means 6% of working geologists will make the discoveries that are made, and they not only tend to make one, but they tend to make more and more. I don't know if Patrick Downey's here. I'll plug him right now because I've followed Patrick for a long time, and I trust Patrick, and I've made money with him in the past. I've never lost with him, right? So when I saw him up here yesterday, I've looked at Orezone. I've had other people tell me, look at Orezone, Greg, look at Orezone. And I said, oh, wow, it doesn't go anywhere. I've been looking at it. It doesn't do anything. And so why should I do something different, right? I'm not interested in Orezone, even though it has an interesting story. But Patrick Downey, I saw him up at the podium here talking about Orezone. I said, man, I'm interested now because he has a plan, and I know this guy figures things out. So I follow the people. Yep.
Fair enough. Good answer. John?
Yeah,
Other than putting it all into your model and like the entire process, the first thing.
No, I look at the structure to see if there is looseness to it, because that's what I prefer. Because if I'm going to recommend something to my audience, I want them to be able to buy this without an invitation. And of course, as part of structure is what is the value of the company at the same time. So if some super tight deal that's been ramped up to a couple bucks and there's systematic liquidation by the cheap paper people going on with a story that's already fully valued, I just move on. But if I see it's liquid, that it's going to have to go up on the basis of a growing audience and fundamental developments, then I become interested. And then I ask, okay, what is the story? And what is the size of the prize that you're seeking? And explain to me what you're doing about it. And then again, I relate that back, well, if you are successful, you're going to have a $50 million market cap, and you already got a $40 million one, so why should I recommend this to the audience? So I'm looking for the value component. What is it that can change that you guys are in control of, and how much upside will that create for the company? That's the sort of metric I use when I approach these companies that aren't already part of my bottom fish or spec value hunter list.
All right.
Yeah. I would look at management first probably, but structure both simultaneously really, and then know something about the management's philosophy. I mean, what drives management? Are they interested in finding a mine and having their name attached to it, or are they really looking after shareholders? So certainly companies that have management with skin in the game, that put their own money into it, is certainly a very valuable thing. They tend to be less dilutive and find ways to benefit the shareholders. But certainly value always has to be looked at relative to the price. And yeah, I think the idea of knowing, it's not something that I pay enough attention to, but it's the idea of knowing when shares are going to come out and hit the market, and when their financings are going to be done. Wait until afterwards usually. And is there a lot of overhang on the stock? I mean, these are all very important things. Timing is everything, and it's just a confession, I've not been as diligent as I should be on some of those issues, which are just as important long-term as understanding the value of a project, perhaps.
That's almost one of the hardest things about assessing, especially some of these smaller stories, is there's so many factors that really play into the details of the price. I mean, over a 6-month period, a free trade date, or a promotion effort, let alone a more legitimate event like a news event. These things all have very significant impacts, and it's really difficult to know the story deeply enough to, estimate those properly. Okay, I've got 2 more questions. One of them is what I'm sure you're expecting, which is you've got to give a pick. So it's great to talk about what we think's happening in the macro environment and why we think certain stages of companies are interesting. But I don't know, how about I phrase it as, what was the last stock you bought in the mining space? I know some of you play more broadly, but what was the last stock that you bought?
For me, it was Golden Predator, because it's had a major discovery, in my view, in the southern Yukon. The stock was as high as I initially recommended it at 35 cents. It went to over $2. It's back down to 70 cents with the sour market and the seasonality stuff. But overall, I did my site visit this year, and I was very impressed with the discovery up there. While I was there, there was a D9 dozer that was cutting a new road in about 1 kilometer away from the existing discovery. And as I was following the dozer, right, he cut this granite, and I see this white granite right in the sidewall. I go up and I pick it out, and it's got gold in it, right? And I said to Bill, Sheriff, I said, how far is this from this discovery? He says, that's 1 kilometer, Greg. So that just expanded the zone by about 1 kilometer, right? That was very impressive to me, to be able to do that right on site as it happened. And now, since then, they found a parallel vein. And I flew on the helicopter all over the place. We landed at multiple junctures. It's a huge property. There's gold outcrop, quartz outcrop all over the place. And I just think this is a district scale situation that under $1, you're being given a gift to get in here. So I'm buying that one. I invited him here to the show. We'll be doing an interview around 11:30. So. Otherwise, production-wise, there's so much supply destruction in silver going on right now. $1,300 gold price. The gold companies can make it. There's a lot of gold companies that can make money at $1,300 gold. At $16, $17 silver, they're all having problems. And there's so many companies that have been on the cusp, hanging by their fingernails for so many years now that something's got to happen. Something either moves up or these people are going to go away. But one of the great values, I think, in silver is Alexco. I think that, you know, when I wrote this report in December of 2015 in the pit of despair, not knowing what else to write, okay, as a newsletter writer, I said, I don't know when these stocks are going to rebound, but here's the stocks that I think have the greatest potential when the rebound does occur. We recommended Alexco, I think it was 26 cents, right? It went to over $3 in 2016, 6 months later, after I wrote that report. It's back down to $1.70, I think, Canadian. But this has great potential, in my view, and as a production story, look at the drill results lately. They've made phenomenal drill results, and all we're seeing is anybody that puts out good drill results, it's a liquidity event, right? People are dumping shares as soon as they get any good news. So that's unfortunate, but it tells you we don't have staying power in our market right now. And this again goes back to my catalyst thing that we need. So.
All right, and then so for John and Jay, it's Novo?
Yeah,
There may be another option, but I'm guessing.
At the last conference here, I told everybody that you should buy 1,000 shares. It was what, $5, $6 and all that, just to be on board this, and because if the biggest picture scenario becomes reality, this is the kind of stock that could end up at $50, and if it looks like it's going to $50, it'll turn into a bubble stock and maybe hit $100, $200, end up, hideously overpriced. So put in $5,000, $6,000, buy 1,000 Novo. It's not a significant position for me. My significant positions are two companies that I built up during the bear market as I supported them. One is Scandium International Mining, and they have hit all their milestones. They're just waiting for some offtake agreements, and then they go raise $100 million to put the world's first primary scandium mine into production. And all the other competitors there are they are hooked into this cobalt nickel stuff. They're ignoring the scandium potential because, of course, the market doesn't exist. All these cobalt things are rising. At some point, the cobalt stuff will flame out, and these companies will, like Cleantech and that, they'll all be damaged by the fallout from that. But this company will then emerge as the proxy for scandium, linked to the emergence of aluminum as something interesting, not boring, as the whole electric vehicle industry starts really taking the concept of lightweighting seriously, and aluminum scandium alloy is the magic. The other one is Nevada Exploration Inc., which has that groundwater strategy in Nevada, in the basins where there is probably the second biggest gold endowment in the world already discovered, and at least as much, if not several times more, left to be found. And it's been a slow plotting process, but this company is miles ahead of anybody, and the moment they get backing from, say, some major one of those 19.9% deals, then everything changes. And this stock would definitely benefit from the Novo thing taking off, because then people will say, well, where else are these interesting, innovative strategies at work? So those two, Nevada Exploration Inc. and Scandium International, are my core holdings. And Novo is the one that's the most fun right now to hold.
Fair enough. Jay,
Well,
what did
I'm
you
not
last
buying.
buy?
I'm not buying any Novo shares because I bought them 3 or 4 years ago at about an 80-cent average cost. U.S. cost about 80 cents. In fact, I sold some when the stock went over $2. I sold enough to get 60% of my cost basis back. So I'm not buying Novo. I have enough. It's actually it's embarrassing, but it's about 66% of my portfolio. So I don't think I should buy any more. I have bought Kirkland Lake, though, which is, I think, a play on a more conservative play on the northwest, on the whole precipitation thesis, WITS 2.0, as John calls it. Also recently bought some Aran, which has suffered really badly with, I think, some disappointing results perhaps from the Nunavut project, but they have so much more going on, and lots and lots of drill results will be coming around the clock, around the year now, because they'll be doing a lot of work in drilling, starting some drilling very soon in Peru and some of their projects. So, this is, as Eric was pointing out yesterday, the time to really pick up things now, because there's so much tax loss selling, really depressed prices. So, yeah, those are some of the recent buys that I made.
All right, now last question. This is going to be a one-word answer. Lots in the audience are probably familiar with Garibaldi. This is the stock that is shot through the moon after announcing visual descriptions of core from the Golden Triangle area of British Columbia, describing nickel sulfide mineralization in the core and releasing photos. We have no assay results yet from those intercepts. So the only question is Garibaldi's asset the next Voisey's Bay? And it's a yes or no answer, and then we're done.
No.
No.
No third choice? Like, I haven't a clue?
Okay, fair enough. If you have no, yeah, that's fine. Okay.
So say it's no.
I had to put it out there. It's one of those ones that everyone's talking about. And that's all. So this is a great, I was happy to start the day with the panel instead of feeling like it's tacking it on at the end. So thank you folks very much for your insight. Hopefully that got us started on a good note. And I think we're rolling straight into our first session of the day. So I will get John to come up.